Hi friends, I'm Srishti from Decipher IAS. So last time we talked of two very basic concepts of national income that were gross domestic product and net domestic product. Today we are gonna take up another two topics of introduction to the national income that are gross national product, net national product. See, let's understand what is gross national product. GNP. Gross national product is the GDP of a country added with its income from abroad. So what two basic components are there? GDP, that is gross domestic product, and income from abroad, which makes gross national product, or the formula can be GNP is equals to GDP plus income from abroad. What do we mean by saying income from abroad then? See, it is the transboundary economic activities of an economy. Let's understand the same in detail. For calculating income from abroad, we consider few items and add them all. Those few items are trade balance, interest of external loans, and private remittances. Now the thing comes, what are these? Let's start understanding with trade balance. The net outcome at the end of the year of the total exports and imports of the country is a trade balance. It may be positive or negative and accordingly added with the GDP to derive GNP. So the formula is trade balance is equals to export minus imports. In what condition will it be positive? Only when exports are more than imports, and negative when exports are less than imports. In India's case, it has always been negative except the 3 consecutive years 2000 to 2003 when it was positive due to high levels of service sector export during the years and just because of the booming BPO industry. Now the second component of income from abroad is interest of external loans. The net outcome on the interest payments and receipt of interest, that is the interest inflow on the money lent out by the economy and the outflow on the money borrowed by the economy. So if we understand the formula, interest of external loans is equals to interest payment minus receipt of interest. In India's case, it has always been negative as the economy has always been a net borrower from the world economies. The third and the last component of income from abroad is private remittances. The net outcome of the money which inflows and outflows on the account of private transfers by the nationals working outside India who make transfers to India and the foreign nationals working in India who make transfers to their home countries. On this front, India has always been a gainer till 1990s from the Gulf region and afterwards from the USA and European nations. Basically, during the year 2012, India is projected as per the IMF to be the highest receiver of this fund to the tune of $58 billion. It was the second highest in 2011 at $55 billion, and 2011 where India was the second highest, China was the top gainer with $57 billion. Ultimately, the balance of all the three components of income from abroad segment may turn out to be positive or negative. Let me tell you, in India's case, it has always been negative due to heavy outflows on account of trade deficits and interest payments of the foreign loans. It means the income from abroad is subtracted from India's GDP to calculate its GNP. The normal formula is GNP is equals to GDP plus income from abroad. But in India's case, it becomes GNP is equals to GDP plus minus income from abroad, that ultimately becomes GDP minus income from abroad. This means that India's GNP is always lower than its GDP. Now, by the end of understanding GNP, what did we get? Let's revise the same fatafat so that you are not confused. It is simply GNP is equals to GDP plus income from abroad, where income from abroad is equals to trade balance plus interest of external loans plus private remittances, and where trade balance is equals to exports minus imports, interest of external loans is equals to payment of interest minus receipt of interest, and private remittances is equals to inflows minus outflows of the private transfers. After discussing the concept in detail, let's see the different uses of the concept GNP. This is the national income, according to which the IMF ranks the nations of the world in terms of the volumes at the purchasing power parity. Please note that I will definitely tell you what is purchasing power parity in my next session, as it is very wide and tricky topics to understand. Next is, it is the more exhaustive concept of the national income than the GDP, as it indicates about the qualitative as well as quantitative aspects of economy. That is the internal as well as the external strength of the economy. Recall that we talked of it in our last session that GDP only indicates about the quantitative aspects and ignores the qualitative aspects of the economy, which is equally important for an economy. And the third is, it enables us to learn several facts about the production behavior and pattern of an economy, such as how much the outside world is dependent on its product and how much it depends on the world for the same by calculating the size and net flow of its trade balance. It also tells us what is the standard of its human resource in international parlance. It is shown by the size and the net flow of its private remittances. It also tells us what position it holds regarding the financial support from and to the world economies. It may be judged by the net flow of interest of external lending or borrowings. Let me explain you. In the first case, the trade balance tells us that what quality of goods and services we are producing in comparison to all the other countries of the world. So if our exports would be higher, so definitely we must be producing some good quality products demanded by the foreign countries and so on. In the same way, Indian nationals working outside India and foreign nationals working here and private remittances made by them tells us the standard of the human resource of the economy. And our financial condition is judged by the calculation of loans we have made to the outside world and we have received any loans from them, and payment and receipt of interest on those loans. So now let's move on to NNP, that is Net National Product. Before moving to that part, let me remind you, if you want us to make videos on any subjects or any special topics, please ask us. We will request our team to prepare the same for our valuable followers. So, moving on, we studied in our earlier session that GNP is the GDP minus depreciation, and we talked what is depreciation and its uses there only in that session. Similarly, on the same lines, net national product is the GNP after deducting the loss due to depreciation. The formula may be NNP is equals to GNP minus depreciation, where GNP is equals to GDP plus income from abroad. So we can say NNP is equals to GDP plus income from abroad minus depreciation. So now let's check what are the different uses of concept NNP. This is the national income of economy. Though the GDP, NDP, GNP and NNP all are the national incomes in one way or the other, but they are not written with the capitalized N and I. This is the purest form of the income of the nation. When we divide NNP by the total population of the nation, we get the per capita income. PCI of the nation, that is income per head per year. The formula we can use is NNP divided by total population is equals to PCI. A very basic point should be noted that this is the point where the rates of depreciation followed by the different nations make a difference. Higher the rate of depreciation, lower the PCI of the nation. Whatever be the reason for it, logical or artificial, as in the case of depreciation, you already know that it is being used as a tool of policy making. Though economies are free to fix any rate of depreciation for the different assets, but the rates fixed by them make difference when the national income of the nations are compared by the international financial institutions like IMF and WB, etc. So today we learn the concept of GNP and NNP. Let me remind you, yet we are into the introduction of economics part only. We will be doing exhaustive studies on each and every topic when the relevant chapter comes, as I am moving chapter wise. Thank you for watching. My next session will cover much wider area of the introduction to the national income. Please do comment in the comment box, subscribe us, like us and share us on Facebook. For many more things, please visit our website decipheris.com, and for any query related to subjects or any suggestions, you may also write to us. Till the next, enjoy, take care, bye-bye.